What's up, guys? My name is Joseph from Ads Partners. We have an academy at DND, and today we're going to cover a topic of what is Forex. So let's get into it. Forex basically is an abbreviation of foreign exchange, and it is buying and selling of one currency in exchange of another. Basically, as we know, different countries have their own currencies. We have Kenya, we have Kenya shillings, US, they have their United States dollar. For the countries in the Europe, they are using euro. For Mexico, they're using the Mexican peso. So for countries to do business, for one person in Kenya to do business with a person in the United States, there will be an exchange of currency. Basically, you find yourself even you've participated in Forex. If you have a friend from abroad who's coming from abroad from, let's say, Britain, they usually come with pounds, either pounds or dollars. And then when they come to Kenya, they convert now the currency they're having, maybe the dollar, to now Kenya shillings, so that they can be able to use it in the Kenyan market. So basically, that is Forex. So many of us have participated in Forex, even without knowing. The daily turnover of foreign exchange in the world is 6.6 trillion. That is dollars. Remember, this is daily. The amount of transactions that are being done on a daily basis is 6.6 trillion dollars. That is a data that was obtained last year. I think last year, 2020, and basically the turnover is going to increase because there's some easiness in doing business um, in one country to another. For example, if Kenya decides to do manufacturing of certain commodities, that is a market, and then they're going to export that particular country. So that explains why the global turnover is at 6.6 trillion dollars. So who are these participants that are enabling the turnover to hit 6.6 trillion? We have central banks. Number one is central banks. Number two, we'll cover that in a few. Number two, we have major banks and institutions, and also institutions are also called corporations. We'll cover that. Number three is retail traders. Now, central banks, how are they involved in forex exchange? Central banks are involved in this way that for one country to boost, let's say, exports, they have to adjust the strength of that particular currency. A good example is China. China is heavily involved in manipulating their currency so that they can be able to attract investors. At the same time, they can be able to attract export or either import. So the main purpose of central banks is to maintain the competitiveness of their currency. Let's say we want to export, so our currency is going to be weak, so that the people who are buying from our currency, they're going to get it at a cheaper price. That's why business ran to China. They ran from United States to China. Number two, we have major banks and institutions. Major banks, and a good example is Barclays Bank or JP Morgan or Citibank. These are big banks in the United States and Europe. The main purpose is to provide liquidity to the market and institutions and corporations. Let me explain this. Let's use an example of BMW. BMW is a car manufacturer company. If it wants to manufacture a car, there's some parts that is going to obtain for a country, let's say like Japan or China. Let's use Japan. Now, Japan is manufacturing, let's say, engine. Now, BMW, it is in the Euro market. Japan, the company that is manufacturing the engine is in the Japan market. So Japanese are using Japanese yen, and the BMW is using now the euro. Therefore, BMW is buying engine worth $100 million, which is a large sum of money. So BMW is going to convert their currency from euro, let's say to United States dollar, and then the person who is going to be the intermediary is now the Barclays Bank. They're going to provide now that liquidity. They're going to participate in now conversion from euro to United States dollar, and then they're going to pay the car that is in Japan in United States dollar, and since the Japanese people, they cannot be able to use the US dollar for their daily needs. That is paying the workers. They have to, the company in Japan is going to convert now the US dollar now to Japanese yen so that their workers can be able to use now the money that has been paid by euro. Now, the person who is ensuring that there is movement, the person who is ensuring that that payment has happened smoothly is now Barclays. So they provide a lot of liquidity because they are big and they have the financial muscle to do that. And then we have retail traders. Retail traders are me and you. For those who are interested to trade forex, our main aim is to speculate the direction of the forex market is going to take, so that we can be able to make profits. Here is an ecosystem, a graphical ecosystem of the forex market. We have major banks. Major banks, an example is JP Morgan, Bank of America, and then we have Barclays. Number two, we have hedge funds and institutions. A good example of a hedge fund is Bridgewater Associates. And then we have retail market makers. A good example is Citadel Securities. And then we have retail traders, example of me and you. Now, the major banks are the ones that are providing the liquidity. The hedge funds are now in their own operations. They're able to provide now the liquidity to the institutions and corporations. And then the person who's connecting now retail traders, that is me and you, now to the market, is now the retail market makers. These are the people, they're also called liquidity providers. We're going to cover that later on to see how much they're able to manipulate and even to participate in the forex market. So the market maker connects the literate trader now to the market. At this level, we also have at the level of retail market makers, we also have brokers. We also have ECN brokers, the brokers that you use to connect to the retail market. For example, I'm using Forex. Forex is the one that is connecting me to the market. Probably it is using now liquidity provider like Citadel Securities. Now let's go to the advantages of forex trading. It is highly liquid. The market is always moving on a daily basis. Like today in the morning, I found that GBP USD has already moved more than I think 100 pips. That is like 1,000 points. So the market is moving on a daily basis. So there's an opportunity for you to make money on a daily basis. If you miss an opportunity today, you're going to get another opportunity tomorrow. If you compare that now to shares, a good example is Safaricom. Safaricom started the year 2020 at around 26 shillings per share. Right now it is at 36. You see, it's already moved like 10 points. So for you to make money from shares is very hard. But the reason as to the liquidity of now the forex trading enables now for you to make money on a daily basis, on a weekly basis. You can even now depend it on now for your needs, expenses, and everything. Number two, you have low barriers to entry, and it is very easy to open your account. For you to open an account, you just have to go to the internet. You Google the best brokers. There are so many brokers, probably more than 500 plus brokers. I'm using Forex because they have a better ease of payment. Now, you just have to open an account. You provide your details. We're going to cover that later on. This is just basically an introduction. You provide your proof of residence, you provide your proof of ID, that is your national ID, and then they're able to open your account. You do a deposit via M-Pesa, you're able to start trading. But we recommend that you seek a mentor, you seek somebody who's going to guide you so that you can be able to be successful in this business. Number three, we have better risk management. When you buy shares, you fully commit the whole amount you have. So for you to guard, let's assume you've bought 100,000 worth of shares of Safaricom shares. You're fully committed your 100,000. When in forex, if you have done a deposit of 100,000 in your trading account, you can even decide that you're going to risk only like 5,000 or even 1,000, depending on your risk appetite. I'm going to cover that also. So number four, you can trade anytime you want. The market is 24/7, 24/5, sorry, 24 hours for 5 days. Reason being, we have 4 sessions in one day. We have the New York session, we have the London session, we have the Tokyo session, we have the Sydney session. Therefore, you can decide to trade at night. You can decide to trade during the day. Luckily for us in Kenya, we can be able to access our time zone can be able to access the London and the New York. And we're going to explain why that during London and New York is the time that you experience the high liquidity, and there's the time you have the best setups to make money from them. We have low transaction cost. The only cost you're going to incur in forex trading is deposit from M-Pesa, and then the broker is going to charge you now the spread. The spread is usually like very small, like 1 pip to 0 pips, or sometimes even 3 pips. If you enter a trade, you're going to if it is a the spread is now okay. The cost of the trade is now dependent on the lot size. We're going to cover lot size on a later topic. So the transaction cost is very low compared to if you decide to buy shares, if you decide to enter into a certain investment module, it is very low for you to start trading. I'm done for this topic. See you guys in the next topic, which is currency pairs. We'll be live in at around 11 Kenyan time. See you guys in the next topic.